Good morning, members, and welcome to this meeting of the Pension Sub and Pensions Board joint meeting of Tuesday the 8th of March 2022. This meeting is being live streamed and recorded, and the recording will be made available on the Council website for public listening. Please follow the good practice guidance, which includes muting microphones and switching off your video when you're not addressing the meeting. Speak in the Teams chat function when you want to contribute, and the usual standing orders apply, including any votes will be taken by roll call. I'm going to take a slight change in the agenda. I'm going to take item 7 after item 5. We have an update which Paul will give us about the Ukraine conflict. So, can we go to Sidran? And apologies, please.
Thank you, Chair. Morning, members. For the Pensions Subcommittee, we've got 4 members present. 1 member present on Teams being Councillor McComb, and the other 3 members present in the Council HQ. I've got 5 apologies from Councillor Drybra, Councillor Bell, Councillor Johnson, Councillor McClelland and Councillor Wilson. And 2 members not present at the start of the meeting is Councillor Charteris and Councillor Ronnie. And if you want me to go ahead for the board, Chair, we've got one member present on Teams being David McKee, and I've got 3 apologies being Doug Fairbairn, Richard Brodie, Scott Proctor. I've now got Phil McGrogan present, so that's 2 members present on Teams, Chair. Not present is Jan Andrews, Colin Graham and David Stainthorpe. Thank you, Chair.
Thanks very much. I do give my approval for remote participation for both the Pension Sub and the Pensions Board. I see we've got Phil McGrogan. Could you please put your video off and only put your video on, please, when you're addressing the meeting? Thank you very much. Are there any declarations of interest for the Pensions Subcommittee? I don't see any. Are there any declarations of interest for the Pensions Board? Sorry about that. Pensions Board.
No.
No. Thank you very much. Then we'll move on to agenda item 5. This is the external audit plan for 2021-22. This report provides members with an overview of the audit plan for the financial year ending 31st of March 2022. It's prepared by Grant Thornton, the Pension Fund auditors. We have John Boyd, the Auditor Director for Grant Thornton, and this year's audit lead for the Pension Fund is available to provide an overview of the plan and take any questions members have. So, John Boyd, are you with us?
Yes, thank you, Chair, and good morning, members. This is our external audit plan for the year ended 31st of March 2022. I'll take the plan as being read and just touch on some of the key messages from the plan. This is the 6th year of our audit appointment, and the plan, and as in previous years, reflects our responsibilities under the Code of Audit Practice to undertake the work in the current financial year. Our plan is based on a risk-based approach as required under auditing standards, and we've identified within the plan 2 key areas of risk, one being management override of controls, which is a presumed risk across any audit of financial statements, and we've also identified the risks of material misstatement in level 2 investments. These are investments where there's an increased level of subjectivity and judgment. And as outlined in the plan, we detail the planned approach in terms of our audit testing over those areas. So our audit of the financial statements is based on materiality. So this is what we presume, based on our professional judgment, what the users of the accounts would consider material to the financial statement. As with other pension funds, we would predominantly use that materiality based on your asset level, given that's the main area of focus of the use of the accounts, and we use a threshold as applied. So for the current year, we've set that at, based on a planning material of 10 million. We will revisit that based on the year-end results. And we report to the committee any error above £250,000. In terms of our wider scope, we consider the pension fund to be a smaller body, and we will focus on the pension fund's financial sustainability, as well as the governance statement disclosures and the adequacy of those. Just the final area I would cover is just confirming our audit independence. We are auditors of the council, who are the administering body on behalf of the pension fund, but we're satisfied that doesn't have any impact on our auditor independence. I've included in there our proposed audit fee, which is set at the baseline audit fee. We reserve the right to review that if any events or circumstances arise during the course of the audit, but at the purpose of our planning stage, we don't foresee anything that would cause us to propose increasing that from the baseline set by Audit Scotland. But happy to take any questions on the plan or of the audit itself.
Yep, thanks very much, John. Any members got any questions, comments they want to make? I don't see anyone coming in. Well, thanks again, John. Members, if we go to the recommendations, members are asked to note the external audit plan for 2021-22 as in the appendix. Noted. Thanks very much. As I said at the beginning, Sorry, members, I had my microphone off. As I said at the beginning, members, we will take agenda item 7, which is the pension fund update and emerging issues. The standing agenda item provides an update to members on current and emerging issues relevant to the pension fund. Updates this quarter include the ongoing investment strategy review, the current strategy review and changes to the membership of the fund. I will now bring in Paul to give us an update about the Ukraine conflict. Paul.
Thanks very much, Chair. I just want to check. I don't know if there is a hand up. I don't know if it's a question that needs to come before introduce this report, Chair. I'm happy either way.
Is that Phil McGrogan's hand?
Yes, Chair. There was just a question I was putting with regard to the recommendations. Is it something that we should just be noting, or is it something that we should be potentially approving or accepting?
What the recommendations in agenda item 7?
Agenda item 5.
Well, we've actually moved on from there, Phil. It's just for noting. It's actually the external audit plan. It's the way forward. This will be presented back to the pensions subcommittee and the board at a later stage. Is that correct, Paul?
Absolutely, Chair. I mean, the plan is the plan of the independent external auditors. It's not a committee decision itself. It's here in front of members for members' information.
Okay, thank you.
Okay, thanks, Phil. Paul, do you want to take us through the agenda item 7, please?
Thank you, Chair. Yes, well, this is the regular report that comes to each of these committee meetings, providing an update on emerging issues relating to the fund. Obviously, these papers were issued prior to the kind of significant further developments in the Ukraine, and we felt it was probably appropriate to bring this item forward on the agenda and to provide members of the committee and the board with an update in relation to the kind of pension fund related issues associated with the conflict in Eastern Europe. So we issued an update last Wednesday to members just for information, initial information based on advice we'd received from Hymans Robertson. We've kept in touch with Hymans through Ian subsequently, and Ian's given us some further information. So just felt as though it was probably helpful just to give that update to members this morning. And if I could maybe ask Ian to come in at this stage and provide that, if that's okay.
That's fine, thanks. Ian?
Hi, thank you, Chair, and good morning, everyone. So just as a quick update on Ukraine and the situation for the fund. So, of course, the invasion of Ukraine by Russia has caused significant humanitarian crisis, and it's also impacted financial markets and the fund's investments and raises a number of risks for the fund. So I'll talk through these and also what the fund can and should do about this. So the first risk is the obvious risk of investments in Russia and Russian companies. These saw a gradual fall in value in the build-up to the invasion, but because largely the invasion was not expected to happen by global investors, there was then an immediate reduction in value when the invasion started. And then these have continued to fall in value as sanctions against Russia targeted these companies and the Russian economy. And in many cases are now very difficult to value, as sanctions now mean that non-Russian investors can't trade some of these investments. So there has been some significant financial losses for the holders of these assets. But for the fund, you had a very small indirect exposure to Russia prior to the invasion. I did some calculations based on the start of the year position, and your exposure was a little over 0.1% of the fund's assets. This was across two passive funds, the Legal and General Global Equity Fund and the Legal and General Emerging Market Debt Fund, which are passive funds that track indices, and so they have to invest in Russia if that's included in the index. And the Baillie Gifford Diversified Growth Fund also had some exposure at the start of the year. Thankfully, Baillie Gifford wound this exposure down prior to the invasion. So at the date of the invasion, it had no exposure to Russia and a very small exposure to Ukraine. And also due to the fall in value of Russian assets, their weights in the passive funds also fell prior to the invasion. So your exposure at the time of the invasion was potentially below 0.1%. So you only had a very small indirect exposure. So your direct financial losses from Russian assets was very limited. However, the market impacts are not just limited to Russia and Ukraine. Particular regional equity markets have been very volatile since the invasion. But global markets have only fallen around 0.7%. These have barely been protected by the US, which stock market is up almost 3% since the invasion began. But because your US is such a large part of global stock markets, that's meant that markets haven't fallen too much from a global perspective. But particular regions have. So Europe has suffered more than most, given its economic exposure to Russia. The European stock markets fell about 9.5%. Since the invasion began. The UK is down just over 7%, emerging markets just over 6%. We've also seen non-Russian companies with significant exposure to Russia pull out of the country, and specific projects such as BP pulling out of Rosneft. Citibank revealed that they had significantly larger exposure to Russia than other major banks. And so they're therefore taking financial hits as they kind of write off this exposure or are unable to continue doing business due to sanctions. We've also seen companies like Apple and Samsung voluntarily pull their products and services from Russia. And we're seeing McDonald's and Coca-Cola receive significant pressure to stop trading there as well. So these are all financial hits for non-Russian companies. So from a wider perspective, the fund has seen some falling in that financial losses and volatility due to the invasion. The war's also raising already heightened concerns around inflation. Russia and Ukraine, of course, produce huge amounts of very important goods for the global economy. Probably most importantly, they're major, between the two, the major producers of wheat, corn and oil and gas. These are major drivers of prices of everyday items, so we should see inflation continue to climb higher as a result of reduced production, as well as the potential for the West refusing to purchase Russian goods, such as crude oil, which has been bandied around at the minute. This is therefore driving concerns of potential recessions in the future, particularly in Europe, as people have to wind in their spending and consumption in order to be able to afford heating, food, petrol for the cars. So this is all what's happened so far. It's, of course, a very fluid and rapidly changing situation. But given what we know now, what can and should the fund do? Well, importantly, on the remaining exposure to Russia that the fund has, whilst it's already reduced significantly, it's set to reduce even further. So yesterday, FTSE removed Russia from their indices. So your Legal & General Global Equity Fund no longer has to hold any investments in Russian companies. There is the issue that Legal & General can't sell these holdings because the Russian market are essentially closed by sanctions. But they are now being valued at zero by Legal & General, so the fund officially has no pound exposure to Russia through that fund, and it will be held at zero until they can either be sold by Legal & General or Russia is re-included in the index. The Emerging Market Debt Fund tracks an index by JP Morgan. They are currently in discussions about whether they should also be removing Russia from the index, so we may see what happens there. But the weight of this fund in Russia has already fallen naturally due to market movements from over 7% at the start of the year to just over 1% at the end of February. So already you have very, very low exposure to Russia there. On the wider exposure to non-Russian companies and markets impacted by the events, of course, as a global investor, the fund cannot insulate itself from these events. The fund takes investment risk in order to earn long-term returns, and unfortunately, these risks sometimes play out negatively. Therefore, whilst it's impossible to know what will happen with this war, how long it may drag on for, how far the war and sanctions may escalate, it's important that we don't make any knee-jerk reactions and potentially crystallise any losses by selling out before markets have opportunity to recover. The portfolio is well diversified. Whilst we still hold plenty of assets in equities, we do so in a globally diversified way, and we've seen how that's protected us so far. Also have a number of diversifying holdings like property and the BlackRock Safe holding. And we also have protection assets through corporate bonds, which have been slightly positive since the invasion began, and index-linked gilts, which are up almost 4%. And so these act as a ballast for the portfolio when equity markets are volatile. And then on inflation, the only asset that protects you from short-term spikes in inflation are index-linked gilts. We have some of these, only a 5% allocation because these assets are very expensive. So if we had a significant holding, we'd see them drag on returns over the long term. But these will offer some protection over the short term and against inflation rises. Over the long term, which is more important for the funds, you have assets that are proven to offer strong protection against higher inflation from your equities, your property, and you have some infrastructure investments through BlackRock Safe. So these tend to offer good protection against higher inflation over the long term. When we recently tested the investment strategy, you may recall from the last meeting that I discussed how we had 5,000 scenarios we ran for each investment strategy. The reason we run so many are to capture market events like this. So the strategy has been tested against these sorts of market conditions and was found to be pretty robust. So the message is to hold tight for now. There's no need for knee-jerk reactions. The fund's a long-term investor, so has the time to ride out volatility, just as it did 2 years ago with the initial COVID volatility. And it's worth noting that market reactions to this invasion have been less severe than they were to COVID. And then looking forward, when we get on to implementing the new investment strategy, we'll of course make sure that we're mindful of any market conditions, including potential ongoing war or effects of the war, and ensure that they're factored into any recommendations that are brought to the committee. So that's all I wanted to say on the Russia-Ukraine situation. Don't know if this is the right time to open to questions or comments or not.
Yeah, thanks very much, Ian. Worrying times for us all, I suppose. I'll open it up to members. Any questions? Councillor Scobie?
No so much a question as really, I think Ian, in fact his name has covered it all in terms of the whole investment, the impact that has on it. And I'm looking at item 6, in relation and the statement that we're making in terms of responsible investment belief statements, where it refers to environment, social and corporate governance considerations in investment. Chair, I think that as a pension fund, irrespective of what we invest and where we get returns from, I think that we've got to apply ourselves to the moral and humanitarian issues that are going on in Russia, on the Ukrainian people. So we, notwithstanding the sanctions and the effect and the impact that has, we've got to be seen to be, not only seen to be doing, but doing something in support of the Ukrainian people as we speak. And therefore, there should be no question in terms of, how this impacts on the investment, in my opinion. At least that we've got to be seen to be in solidarity with the people of Ukraine. And if this brings an end, as I hope it will, whatever sanctions we put to that war that in Ukraine, then so be it. And I hope it's sooner rather than later.
Thanks very much, Councillor Scobie. I don't know if anyone wants to reply, but Paul?
Yeah, no, I think they're really important points, and one of the reasons we brought the item forward today was obviously this does link into the responsible investments beliefs issue that's coming up as the next item on the agenda, and the fact that the fund and the members have given increased focus to responsible investment as part of developing our strategy is very positive in that respect. I think understandably our focus in developing that to some extent has been on kind of climate related issues, given the prominence that they have had of late, but I think what's happened in the last couple of weeks really does enhance the importance of that responsible investments beliefs approach, and it does take into account much wider issues such as what we've been talking about this morning as well, in addition to those climate change related issues. So I think it's making sure that these type of issues in terms of responsibilities of the fund are covered by that statement, and that we actually act on them going forward as well.
Thanks very much, Paul. I don't see anybody else want to come in. Councillor Thompson.
Thanks, Chair. Yeah, I suppose it's on a similar point, but obviously certain parts of the market will perversely do well out of situations like this, such as aerospace and war type stocks. Obviously, we have to balance our fiduciary duty against the ethical and environment ESG sort of concerns that the statement provides, but I think that might make some members feel a bit uncomfortable that while our funds may be impacted to some degree because of the humanitarian impact, there's actually stocks that we invest in that arguably lend themselves towards continuing that. So, that's a sort of uncomfortable ethical position to be in, while we might benefit from it financially. So, how do we deal with that? Because it's got nothing to do with the environment as such, but it is an ethical, social concern.
I don't, Paul or Ian, do you want to come in? Got any comment on that?
I'm happy to come in on that one. So you're absolutely right that the fund will have exposure through its global equity holdings to kind of defence companies. They have seen rises in their share prices since the start of the war. After Germany announced that they were going to be increasing their spending on defence pretty significantly, so a lot of German defence companies saw their share prices rise significantly. I think from an ethical perspective, it's extremely difficult thing to challenge. You can see arguments from both sides that, yes, it's not great that money's being made from companies that are helping war, but they're also potentially helping to stop Russia invading another country. So it's a pretty difficult point that I don't think any sort of investor has tackled properly yet. I think what is helpful is that the fund doesn't invest in any what are known as kind of controversial weapons companies. So things like cluster bombs and weapons that are seen as particularly unethical. that there is some evidence that have been used by Russia in this war. The fund doesn't have any exposure to those sorts of investments. They are generally screened out of these indices that the fund tracks with its investments.
Thanks, Ian. I think Councillor Thompson wants to come back on that.
No, that's helpful, and obviously we have to take a very measured decisions about these things, but it does then raise the question about, our strategy for investment is a long-term strategy, and I suppose if we're looking far enough ahead with clear vision, we would see that investing maybe in potentially companies that benefit from regimes that are ethically questionable, that are yet to go to war, but it's kind of the letter's in the post and we don't know when it's going to arrive. So, how do we? Obviously, Russia's very much here and now, and is enough to deal with, I think. But there will be things that we invest in through our vehicles in states around the world that may not yet be a problem that's on the news, but will be because of the nature of their regime or lack of democracy or whatever it is. So, is that something we have to factor in as well?
So yes, absolutely right. And again, this is something that this war has brought out more to investors of investing. As a global investor, you're always going to be exposed to these sorts of geopolitical risks. It's heightened somewhat by being exposed to emerging markets. The big one that's obviously come out is further concerns around China and its designs on other nations or other lands owned by other nations, and whether people have the appetite to invest in those sorts of countries. I think what I pull back to is in the responsible investment belief statement, which I know is the next item. We have a key belief that came out of the debate that we had last meeting and the responses from the results of we would implement ESG only as long as it isn't expected to reduce financial outcomes. And I think excluding China from an ethical perspective, some could argue for, but from a financial perspective would be a real challenge because it is such a humongous part of the global economy. But again, these are points that can be debated if we wanted to in a more kind of detailed review of responsible investment beliefs. But right now, based on the beliefs that we've had, I don't think we're in contradiction of the statement that's put in the next item.
Yeah, thanks, Ian. I'm sure a lot of these points will probably be picked up when we get to agenda item 5 on responsible investments and ethical investments. I've got Jim McComb wanting to come in, so if it's on much the same points, can we pick this up on the next agenda item? But I'll bring you in anyway, Jim. Councillor McComb.
Thank you, Chair. The area of contentious investment may very soon be food commodities. You mentioned, Ian, the vast amount of wheat and barley produced in the Ukraine. Obviously, there's going to be a worldwide shortage of food commodities. And you're left with the very fine dividing line between seizing an investment opportunity and profiteering. That is a question all investment funds are going to have to face in the coming weeks.
Yes, that's absolutely right. Whether investors are willing to take that potential return opportunity is always going to come down to beliefs. I think it's helpful that a lot of the investments are managed passively, so there's no active investment decision about whether those companies should be invested in or not. It's purely rules based. In your active managers, things like Bailey Gifford, they could choose to invest in these companies if they saw a big return opportunity there. I think it would be helpful that we make sure we understand from Bailey Gifford what are their beliefs here, what would they be happy to do that for the fund, which is something that we can take away and discuss with them. But also whether the committee are happy to be investing in these types of companies to to make money for the fund over the long term.
Thanks, Ian.
Thanks very much, Councillor McComb. Thanks, Ian. I've got one question, Paul. Maybe you can help out. It's the transfer of the DGHP membership to the Strathclyde Pension Fund. I'm just wondering how many people does that involve in that particular transfer?
Fortunately, Chair, I haven't got that information to hand. And I know that the transfer has now been completed because we checked that earlier this week, but I don't have the figures. I don't know if any of my kind of colleagues on the line have got that actual detail at the minute.
I wonder if is Ross on the line?
Morning, Chair. I think Isla Herrick from the admin team is on the call, so Isla may be able to provide that information if she's here.
Thanks very much, Isla.
Happy, Chair, just to come back to you with give you that information. Is that okay? Should we be able to do that this afternoon?
Yeah, no, that's fine. It was just an odd question, I suppose. Anyway, members, if there's nobody else, Jim, I see you still got your hand up. Is that a legacy hand? Okay, so it looked like it was a legacy hand. If we go to the recommendations, recommendations are to note 2.1, 2.2 and 2.3. Are we happy to note those recommendations?
Good.
Thank you. We now move on to agenda item 6, which is the Responsible Investment Beliefs Statement. Members of this committee have been keen to see more development on responsible investment, and following on from the survey carried out by Hymans Robertson, officers have drafted a Responsible Investment Belief Statement based on the results of that survey. This paper is asking for agreement for this statement to be adopted as a key fund document, which will assist in underpinning investment decisions made in the future. So I'll open it up to any members' questions, comments, unless, Paul, have you got anything else to add?
I think the only thing to say is that this has been developed in consultation with colleagues in other pension funds. Ross has been involved in a kind of group that's developing this for other funds, so it's in line with the principles that are established as part of the kind of overall approach for Scottish funds to developing responsible investment beliefs. As I mentioned earlier on, it does have, given the kind of focus over the last couple of years, it's got a focus on climate change related issues, and I think what we've seen subsequently in the last couple of weeks enhances the kind of importance of the kind of wider aspects of responsible investment. But the strategy itself, or the statement itself, is more about the principles in terms of how we take ESG considerations into account in our approach, so it covers all those kind of wider aspects as well. But it's really, this is the kind of the overarching statement which will help inform how we take forward the development of our investment strategy. Okay.
Thanks very much. Councillor Thompson.
Yeah, thanks, Chair. And obviously, we welcome having this. I think it's taken a wee while for us to get an actual statement that we can articulate and share. So I think credit has to go to the fact that we've managed to get to this point, and obviously it'll be hopefully improving from here on in. What I would want to know a little bit about, though, is obviously we don't invest directly, but through a number of, through a fund manager and a number of different funds in that respect, according to our strategy. So how do we, moving on from here to the future, how do we ensure that those funds that we're being advised to invest in, for example, or that we select, meet these standards? So I'm sort of thinking, do we have to do a bit of retrofitting to some of the funds we're already invested in, or some of the vehicles? Because often we're almost like investing third hand. So while we can adopt this, how does that then cascade to the products that we are actually buying through our management team. Thank you.
Paul?
Yeah, I think I'll probably bring Ian in a second just to give us a bit more detail on this, but this obviously is a development of the previous ESG approach that we had. It's rather than a kind of significant sea change, and that is probably an increase in prominence of this type of issue, and we do influence the actual managers of overall funds and pools that we're invested in, but I know Ian has probably got a bit more information on that as myself, so if Ian can maybe come in on that.
Yeah,
Ian?
sure. So you're absolutely right. We invest in pooled funds, and so we can't tell the managers what to invest in and not invest in, because there's potentially hundreds of other investors in the funds that may not agree. So what we need to make sure is that the funds we're invested in do reflect our beliefs, and where they don't, it would essentially mean a change of the fund's investments. So we've previously discussed the potential that we could invest in more ESG focused versions of our passive funds, as if that would be a better reflection of our beliefs. Now, part of the strategy review, when we get to it later this year, will be considering that very point. And you're absolutely right. We need to ensure the current investments reflect these beliefs, and we need to make sure that any future changes all funds do reflects these beliefs, any new investments. And Hymans Robertson do a significant amount of responsible investment and ESG research on managers. So we will be able to provide that research to you as part of any sort of selection of investments.
That's great, thank you.
Thanks, Councillor Thompson. Thanks, Ian, for that. I've got Phil McGrogan next.
Thanks, Chair. It's actually David Stainthorpe. I'm sitting with Phil. Just had a query about the wording in the statement. You'll see the items in bold. There's a number of them, but the first one gives us our financial basis for making decisions. We then go on to the fourth one, which is where I've got the query. It's then suggesting that we actively seek to invest in such funds, but only if the returns offered are as attractive. Now, I'm thinking if we just stopped that statement after climate change, it would be a more relevant statement, because we've already specified what our financial focus is on the first element there. Thank you.
Thanks, David. Anybody, Paul, you want to come in on that?
I mean, I can understand David's point, and if the committee are comfortable with that change, I've not got any problem with it. I mean, I think what we've tried to do, both in the statement and in the covering report, is to highlight that there is an increasing alignment between the benefits in terms of financial benefits alongside the responsible investment benefits. So it's not as if they're in contrast or contest with each other. But if members feel as though that kind of revision that David suggested to that particular sentence would clarify things, I've not got a problem with that.
Yeah, I mean, I was content with the wording, because, I mean, at the end of the day, we're trying to look for the best returns we possibly can. I'm not sure. I suppose it's up to members. Councillor Scobie?
It's not on that subject in case there's anybody else wanting in. Right. It was just, you said that if we could take some of the issues back to item 6 in terms of what we were making in item 7, and I find Stephen's comments on how we invest in issues to do with war and merging countries that may not have the same ethical standards that we have. And if memory serves me correctly, I think that this whole paper came about from the Campbell field and the investment in that in the North Sea in terms of climate change and where we stood on that in terms of our investment in Shell and so forth. But I think that Stephen raises, as I said, a very interesting point in terms of the arms race and how, you know, I think it was at the Falklands that we were still selling to countries that were waging war and so forth, not only on ourselves but other countries. And I think that Ian referred to it, that we may need a more in-depth paper to come back so that we can look at these issues and see where we do invest, so that it does meet our beliefs, not just in climate change, but on other issues where they don't meet our ethical standards. And I don't know if that was what David was alluding to, but I think as a committee, on a pension subcommittee or board, that we've got to look at that, but we've got to look at it in more depth in terms of just how it does meet with our ethical standards and how we are investing irrespective. So I'm in support of what David said. I maybe should have just said that we all should welcome Phil back and looking in good health. It's good to see Phil amongst us again. So, Chair, I think, you know, when we come to the recommendations, I think we do need to look at bringing back a paper, not just looking at climate change, but looking at the whole ethical standard principles and how we do invest.
Thanks, Councillor Scobie. Is that something that we can maybe accommodate, Paul?
Yep, thanks, Chair. Yeah, that is the intention. The approach now, this was the kind of overarching responsible investment belief statement, which will help inform the next stage of the development of our investment strategy, and we'll be coming back to members with more detailed considerations on that going forward. And as Ian said, we can take into account these beliefs and the kind of development of kind of further concerns in relation to ethical investment as part of that further development of our investment strategy. So that's the plan, taking that forward. But I see Karen's on screen. I don't know if Karen can maybe add something to that at the minute.
Yeah, I was just going to suggest, obviously we have the fund managers coming in a sort of rotational basis, that perhaps the upcoming meetings of those fund managers could have a particular focus on ESG and explain a bit more about what they're invested in and what activities they're doing as part of their fund to help sort of match our responsible investment base, rather than like a detailed paper. Maybe just discuss with each of the fund managers individually over the next few committees, if that was something that members would like to see.
I'm sure that's probably the case. Are you content with that response, Councillor?
Yeah, Chair, I made reference to the arms race and on the back of what Stephen was saying there. But, you know, we are a council that recognises fair trade, and we take pride in that. But have we really looked at it in terms of investment in the pension fund, in countries that don't recognise the fair trade and so forth? So there's a plethora of stuff that we need to look at. It's just that we've had a sharp poke in the eye, or a poke in the eye with a sharp pencil in terms of Ukraine and Russia. And I think we've got to be looking at that in the wider aspect.
Yeah, I'm sure that's quite agreeable. Councillor Thompson?
Yeah, on a related point, I mean, I think obviously here we've got the sort of principle, and the spotlight was very much, when this was coming into being, on, I suppose, climate was obviously the sort of headline, and then that governed a lot of questions and debate about what responsible investment would be in terms of, you know, environment, social governance. But the principle would apply to everything out with that as well, and I think it's obviously the spotlight now is on, well, what about war and the industries related to that and the impacts of that. So I think, yes, we have the opportunity to question our individual fund managers, which is one thing. I think given that we're at a point now where we can agree this as a principle, it would probably be worth reflecting on that principle regularly or annually, because obviously there might be a wee bit of work to do with our existing funds as we sort of steer the tanker towards the, you know, the direction of travel we want to go in. But then maybe to come back to that and say, well, okay, let's have a wee more of a spotlight on are some of our investments in questionable regimes. You know, I don't want to sort of, I think it's sort of almost famous relationships with selling arms to Saudi Arabia or whatever, and it's not to say that there's not improvements to be made there, but there's clearly a lot of business going on, and I can understand the difference between defence of a country's sovereignty. That's one thing, but then if you're exporting products to another country to make money on the back of something that's maybe less ethical in the eyes of the world, again, we have to take a measured view. So I think, but we're not yet as well informed as we could be about the nature of our fund, and maybe that is something that we should mention, because clearly the focus has moved from climate, although that's still there, but there's now a focus on, well, what about ethical investments in other areas? So I would welcome something further to come back, even if it's just to review how we're getting on with implementing our principle. And just in terms of the wording, yeah, I mean, I can see the point. Do we need to say it twice? I think we've established that we don't want to reduce our financial returns as the primary thing, because that's the fiduciary duty. So it maybe does dilute a little bit the fourth bullet point, as David was mentioning, just about support opportunities arising from climate change if the returns offered are as attractive. I think it's almost redundant, that statement, but I'm not overly concerned about it, but I can see the point that's being made. Thanks, Chair.
Thanks, Councillor Thompson. Yeah, it seems to be members would like more information, more, especially on other things, as well as the climate change. As Councillor Thompson mentioned, when we're investing in companies that produce arms, etc. So I believe that's what members are content with. I don't see any other hands. Or do you want to just add anything to that, Paul, before I go to recommendations?
Thanks, Chair. I was just to say, on Councillor Thompson's point, the report makes reference to the plan that we will review the responsible investment belief statement on a regular basis. I think taking into account those comments and others this morning, I think that probably needs a kind of overall review, at least annually, but also that these considerations are taken into account on an ongoing basis as part of the reports coming to the committee and the decisions taken on the back of those reports.
Thanks, Paul. I see Councillor McComb's got his hand up. Jim?
Thanks, Chair. Just to confirm, we have agreed to delete the wording after climate change in bullet point 4. Is that correct?
I don't think we actually got agreement on that, but I'm easy, I'm...
Well, personally, I see it as superfluous.
Yeah, well, there seems to be agreement in the hall here to take that part out. So, yeah, I can go along with that. Paul? Yeah, Paul's happy with that as well. So if you're content, Councillor McComb, we can go to the recommendations. Okay, members, we'll go to the recommendations, which are asked to agree the responsible investment beliefs in the appendix and to remove, was it 1, 2, 3, the fourth bullet point. I take it was just offered as attractive, or at least change if the returns offered as attractive to be taken out. Is that correct? I'm getting nods in the chamber here. Is that a legacy hand, Jim?
It is a legacy hand, which I'm just about to remove, Chair. Thank you.
Thanks very much. I appreciate that. So I think members are content with that. Okay, members, we'll now move on to
Chair,
agenda.
could it just be that we do put in there that we seek a further report on the whole ethical standards, the impact of that, and so that we can get more discussion in more depth?
I think Paul's already alluded to that earlier
just
on.
so it's a minute trail of it that we put that in there.
Yeah, happy with that.
Good.
Okay, members, now go on to agenda item 8, which is the annual training plan and record of training update. This is a standing item on the agenda with an update on the training plan. This particular report focuses on the final training plan for 2021-2022, and a new training plan will be brought to the subcommittee following the local government elections. I will now open up the floor unless Paul or Ross or anybody wants to come in and add anything. I don't see anyone coming in. Councillor Thompson?
Yeah, thanks, Chair. It was just it's actually more of a question. Obviously, there'll be a refreshed council after May, and you know, I don't know how long, you know, like the driving licence lasts for. Do you know what I mean? So I mean, it'd be good to have some kind of a sense of will the lists sort of after May feature basically a blank slate and everybody has got to do it all again, or how does that? I'm sort of looking at some of the dates there. Obviously, some of the training has been done in previous councils, but is that something that would be good practice to refresh, or how would we approach that as a new council?
Paul?
What we would look to do after the elections and the committee is formed going forward is to establish a training programme for all members of the committee. That would include those that are ongoing members as well as new members, but provide some additional kind of more focused support and training to the new members. But in terms of the kind of, you know, sell-by date in terms of previously undertaken training, that's maybe something we could look into a bit further. But I see Ross has appeared on the screen, so maybe Ross could add something to that.
Yeah, thanks, Paul. Thanks, Councillor Thompson. The pensions regulator training, as far as I'm aware, doesn't have a time frame, but I will check on the website and make note, and it may be, as you've said, worthwhile just doing a refresher for members who have already done the training and also new members that come on. It is compulsory that they do that training. So when we know what the makeup of the new committee is, I'll look at the pensions regulator website and come back to members regarding that training.
Thanks, Ross. Do you want to come back in, Councillor Thompson?
No, thanks. It was just, as I say, just to check. Thank you.
Thanks very much. I don't see any hands up. Anybody in the chat? So we'll go to recommendations. Members are asked to note 2.1, the update in relation to the review of the investment strategy as detailed in paragraphs. Sorry, I'm in the wrong one here. Apologies, members. Annual training plan. Recommendations are to note the 2.1, the final record of training plan for 2021-22 as in the appendix. 2.2, the record of training and training plan for 2022-23 will be brought to the next meeting of the subcommittee and board following the local government elections, and the membership of the committees has been agreed. And 2.3, members of the subcommittee and board are required to complete the pensions regulator training within 3 months of joining the subcommittee and board as detailed in paragraph 3.4, and the comments have been noted as well from members. Okay, if we're happy with that. Now go on to agenda item 9, which is any other business deemed urgent by the Chair. Well, I don't have any urgent business, so we'll go to agenda item 10, which is the Local Government Scotland Act 1973, to consider adoption of resolution to exclude the public from the meeting in terms of section 50A, brackets 4, and paragraph 6 of part 1 of schedule 7A of the Local Government Scotland Act 1973. If members are content with that. Just to remind members, we have another Teams meeting for exempt item 1. Councillor Scobie, you wanted to come in?
I'm just wondering, Chair, if you'd be quorate. I've got a meeting back in Stranraer that I may have to leave, but I'm just wondering if you'd still be quorate.
If you were to leave, I believe we would still be quorate. Is that right, Tracy?
You're okay with
That's fine. Yeah, we will be quorate. So just to remind members, there's another Teams meeting set up for exempt item 1. So if you leave this Teams meeting, I'll join everyone in the next Teams.